Good morning, everybody. Welcome to the Trading Market Technicals Morning Call video for Wednesday, October 24th. Big red day on Wall Street. Markets gapped lower, tested lows early in the morning around 10:30, 11 o'clock, and then really put in the low for the day and kind of grinded slowly higher into the close. Nonetheless, still a big red day. Real quick, I'll run some numbers. NASDAQ down 25, Dow down 243, and S&P down 20, almost 21 points. We had an outside day reversal at the close. We broke some major support. So the charts do not look good. We definitely did some technical damage here. Now, where do we go from here? It's a big question. When we have a big gap down day like we had yesterday, markets gapping lower at the opening, it's very hard to come in and look to short the market, especially when you had two big down days. And actually, really a third where we had that reversal from the peak, and then we started selling off and we gap lower. So risk-reward being short actually paid off here at the opening, but you're taking a lot more risk. And we're not looking at, right, we want to minimize our risk when we're trading. So this little bounce here, you would have gotten short. Let me open up the chart here again. You can see that little flag pattern here never took out the high. You could have gotten short the market. A lot of stuff that I was looking at was already really beaten down pretty bad and really marked the low of the day. So a lot of the stocks that we were following yesterday really made its low at the opening, maybe a little bit of a few pennies more lower, and then actually ended up grinding higher into the close. So that's really what a lot of the new traders face when you have these big gap down days. So it's either look to short on a bounce or where do I get long, right? And a lot of times it's best to just stay aside, let the markets do its thing, and carve out a bottom. Now I do see some more continued downside, but the market just does not go straight down and or straight up. So we're going to be looking right now, since we broke some resistance, we're going to be looking to sell rallies for the day. We're not looking to take positions at the moment because the markets are still in turmoil here, and corporate earnings are just a disaster. And I mentioned that when we first started. DuPont and 3M were the choice yesterday. Really took down the Dow. Apple really getting decimated on their new launch of their product. They literally reversed course and closed down $20. Not looking good. And I kept saying Apple is in trouble. I still feel that way, and I think that there's better places to put your money. I wouldn't be averaging in Apple here. Yes, Apple could bounce 15 points today, but that's not really what you're playing Apple for. You're playing Apple for, for a good 20-point bounce, 25-point bounce. So it is a $670 stock, and there's a lot of risk involved with Apple. So I'll get into that as well. And I want to show you some of the indicators here. Nonetheless, here's the 5-minute. I just really run a quick little thing here. Like I mentioned, big gap down, and we started kind of really basing here at the end of the day. And look at this. We didn't even have our normal short covering rally like we usually do. So markets clearly an outside day reversal at the close. Really not looking pretty. Now, where are we, right? Where do we look to? Do we have room for further weakness? Absolutely. We have the NYMO McClellan oscillator here. Usually when we get that outside band, you could see here, but we're still only at 42, negative 42. Plenty of room to the downside. So even if this chops around a little bit, I do see some further weakness, and we have plenty of room. We can be oversold for quite some time before the markets start to rally here. Now, take a look at copper. Copper literally just got decimated. As you can see, had a nice little channel, hanging in a channel, looking for that golden cross, that 50 to 200 day. Didn't happen yesterday, and look at what happened. Big reversal bar day down. So now, really what we're looking for is some sort of stabilization right up in here, maybe the 350, right in this area. If we could chop around and get back above the 20 and 50, then I think that we could at least get looking for some sort of a market bottom, but not now, as you can see. Now, several weeks back, I mentioned, look at the McClellan, New York Stock Exchange Summation Index. 5 weeks ago, I said that the NASDAQ put in a sell signal. What a great sale if you were positioning yourself. I mean, that was really, you can't get any better than that. Now, this is a weekly chart, so we're in the middle of the week, but I wanted to show you, look at this. We have not even close to being oversold yet. Plenty of room. So you're probably looking at another, unless we have a huge up day, you're probably looking at another week or two before this thing even goes on a sell signal, or unless you have a big couple of down days and then and a clear reversal. But we're gonna something like this. So we're gonna monitor this, but you clearly see that the NASDAQ is really having some problems. VIX, nice gap up. We saw that. Now we'd like to see, probably we're going to retrace a little bit, but we need to hold this downtrend line. And if we do hold this downtrend line, I do see some further strength in the VIX. And as you can see, our S&P, our cash, we started rolling over here. Now the VIX is now starting to perk up. Let's see what happens. This is a critical juncture for the VIX. If we can roll back down again and back test it and move higher, then I think that that the VIX will start taking off again. Let's take a look at the put call. I haven't showed you this in a while. This is a little area of resistance. We broke out of it. Fear coming back into the markets, obviously, up $1.06. So the further the put call spikes, the more the VIX moves higher and the bigger the sell-off. So let's keep an eye on this. This is something I'm going to be watching here in the coming days as well. Lastly is the dollar, and then we'll get into the indexes. The dollar, big gap update today, right? Fear in the markets going to the safe havens, the bonds, and of course the dollar. Now we do have our death cross here, so this is really right now is just running by fear. So this is not anything that I will be looking at, but I do see the dollar rallying in the coming weeks and months here. I do see the dollar rallying. So watch what happens here. We have a FOMC meeting. I believe it's today and tomorrow, or yesterday and today. Actually, today they'll come out with a statement. So watch what the dollar does. It's going to be pretty exciting to see what happens today. Okay, now let's go into our charts. Yesterday I put this sort of scenario, and it looks like it's playing out. Where to, we don't know. But as you can see here, 38% comes in at the 1400 level. 1395, excuse me, 1400 if you will. And then of course the 50 lines up nicely with the 200-day moving average. So maybe another push lower, and then a sideways consolidation, low volume. That's where we're going to look to get short, and then we're going to look for that last big move lower, which would be probably 1371, 1375 in the cash. Okay, so now we did break this big long-term trend line since June, guys, and a large outside day reversal. So the bulls have a lot of work to do. They have to really get into shape here and start really getting back above this trend line, if that's going to happen. Now, again, ugly day. I mean, real ugly day. This here, this reversal candle is not really a good sign, at least for the coming days. I do see us maybe bouncing here slowly, low volume, lethargic rally, and that's going to really be a sign that the sellers will probably step back in again, at least for one more push lower. Now, spiders, take a look at this distribution. Really, really big volume bar today. Yesterday, excuse me. I have some small little support areas, but as you can see, the big area here, we lose this guy, this area in here at the 139.80, even call it 140. We're going to test the 200. That's normal. It's just going to happen that way. Big volume, big thin zone area here. But what happened here, we had these two little pivotal areas of resistance, which were support, and we stopped it right to the penny. But again, if you look at this lower trend line, long-term trend line, clearly closed on an outside day reversal. So really ugly day. And I do see us either retesting the upper end of this lower end of the trend line and then failing miserably, or I do see us pushing lower and then trying to make some sort of a comeback and then fail one more time. That's what I'm looking at. We are in this area here in a 30-minute chart. As you can see, I had this up from last week. We are already in the area of support, the support zone area. This, I want to show you this here. Call it S3, right in this area here. You really have your last little area. But if you look at this area, S3 140, if we lose that, you're looking at 138 and then 136 in the spiders. And I showed you that on the last video. So just really keep an eye on the spiders here. 140 is going to be a big area, a real big area. Now, look at our TLT, right? We had a big move, big gap up, and a big move higher. Now, we're coming into resistance again. So, and it did have a couple of big up days. So, we'll see what happens with. I don't think bonds are going to do much until after the FOMC statement comes on. So, that's something that we're going to monitor. I'm not going to really pay too much attention to it today. But the next day or two, maybe Thursday, Friday, the end of the week, see where they close. It'll be interesting to see where the bonds do close today. By Friday. Diamonds, which is the Dow Jones, big, ugly. Look at this, really getting smashed here. And this is again culprits to 3M and DuPont. Now UPS had I don't understand how that rallied so hard, but nonetheless, UPS did close up, helped the transports. I'll get into that chart too, but I just want to show you where we are right. We're just about at the 38% retracement coming off the highs here. So again, possibly due for a little bit of a bounce. We have additional earnings coming out today, tomorrow, and Friday. So just be on your toes. And if you are trading anything and you're holding something, make sure you look at the earnings calendar because that could really, really hurt the account. All right, next one would be the XLF. Banks held up quite well, though. I'm surprised. I tell you, they really surprised me. I really don't trade them. Not really too keen on trading the banks. A lot of manipulation there, but nonetheless, look at this. We had a nice little, still staying above the 50-day moving average. We did break the 20, but we were above the 50. So banks are holding up pretty well. That's one area. IWM's the Russell. Now, the Russell actually hit the 200-day moving average because I got an email saying, "Oh, look, the Russell's doing pretty well." Yeah, but if you look at it, it's at the 200-day bar moving average on a daily bar chart. So even though it held up well, we're already at the 200, where a lot of the other indices just broke their 50. So they're going to be playing catch up to what the Russell's going to be doing. So again, really no true sign of any type of strength here. I like the fact that it held the 200-day moving average, but really nothing that great to really talk about. All right, transports again sitting between the 20 and the 50-day moving average. Did pierce it back up again. That is a good sign. I mean, it is a good sign that that we do have a little bit of strength in the transports, and they aren't just collapsing like the rest of the market is. And here's Apple. Big outside day, close, red. We took it back the next day, which is great, and then we took it back again. And after the launch, so I do see that there's additional area of weakness. I have my head and shoulders target here at 590. So 600, 599, 600 is going to be the first target of the head and shoulders target. Now, after that, if it breaks 600, there's no reason why we can't get to the 200-day moving average. And by the time that happens, it'll probably be about 588, where my target is. That is where 588 to 590, even 595, small, if you wanted to build a small position in Apple. Obviously, your stops would be accordingly below the 200-bar moving average, and again, according to your risk tolerance. So ugly day for Apple. I would not be looking to buy Apple here. Even if the Apple's up today, I would not be buying Apple here. I think Apple's got some issues, and I think a lot of these hedge funds and money managers that own Apple, which the number one holding in on Wall Street, I think that they're going to be looking to take some profits. And why wouldn't they if they bought them way below where we're trading right now? And again, don't forget we only have about 6 weeks left of the new year. Of the end of the year. Coming the new year. So profit take is probably going to be in the cards. And SMH here, the semis, well, they've been beaten down, so they've been. We had a little bit of movement in here, and we actually still below the 20-day moving average, but really, really weak. And look at the Qs. Lastly, the Qs sitting on the 200-day moving average. And again, Apple is heavily weighted in Qs and the S&P 500, guys. So really, whatever Apple does, could trigger some sort of movement lower and could snap up a rally as well. So keep an eye on that. Last, I just want to talk real briefly about the euro dollar. I did say watch the 130 level, a break below the 130 level, probably usher in a lot of selling. Sure enough, euro trading at 129.25 right now. Big move lower, and now really can't get its footing. When now the tide has shifted from very bullish to now getting weaker, and if the euro dollar can't hold or sustain any type of rally, you're going to see further weakness and further weakness in the markets and further strength in the U.S. dollar. And if you look at some of the other European counterparts, the FTSE and the DAX, they're not looking too great either. So I do see additional downside, which is going to be great, positioning ourselves for our Santa Claus rally if that still comes into fruition. But right now, we're looking for further downside the next few days. All right? Be safe, use your stops, and we'll talk to you tomorrow. Take care, everybody.